Hey, before I send this bid over, the contract wants me to add them as additional insured and carry completed ops. What's that gonna run me?
Smart call. Let's price it now so it's in your number before you commit.
So I got the job, but now they're saying I need $1 million in additional insured and completed ops coverage. I already locked in my price.
That coverage is going to come out of the margin you already committed to.
So I'm paying for this out of my own profit.
Same contractor, same job. The only difference was when he picked up the phone. Most contractors price the job first and think about the insurance last. And that order, that sequence, quietly comes straight out of your profit. Let me show you the fix. It costs you nothing but the order you do things in. So why do contractors do it in this order? It's natural. You price the labor, you price the materials, you price the timeline, the equipment, the stuff you can see and touch. Insurance feels like a fixed background cost, something you pay for the year so you don't itemize it job by job. But commercial contracts don't work that way. A commercial contract can carry job-specific insurance requirements, additional insured, completed operations, higher limits than you normally carry, primary and non-contributory. And those aren't free, they vary by contract. Let me walk you through what a contract can require that changes your actual cost. Higher liability limits than your standard policy, additional insured endorsements for the general contractor and the owner, completed operations coverage, a waiver of subrogation, sometimes on bigger jobs, a project-specific policy or a higher aggregate limit. Each one of those can carry premium, and here's the thing. If you didn't price it into your bid, that premium doesn't disappear. It comes out of the margin that you already committed to. Now here's the fix. And it's almost embarrassingly simple because it's just a change in the order of how your workflow goes. Before you submit a bid on a job with insurance requirements you haven't priced, call your agent and get that number. Then build it into the bid like any other line item, the same way that you would price in a material or a piece of equipment. Do that and the coverage becomes the client's built into the price that they agree to pay. Skip it and the coverage becomes your cost, pulled out of your profit that you were counting on. That's what Hank did right in the first scene. Same job, he just priced it before he committed, not after. And here's a bonus that most contractors miss. Pricing insurance into your bid makes you look more professional to the general contractor or the owner, not less. It signals that you read the contract, you understand it, and you're not going to come back halfway through the project asking for more money because you underbid the coverage to begin with. That kind of accuracy is what wins you the next job and the one after that. So if you've got a bid coming up with insurance requirements that you haven't priced, that's a quick call before you submit, not after you win. Book directly at the link in the description, or you can give us a call at 318-423-7445 or go to callwatley.com. Next week is the finale of this whole series. Everything we've covered tied together into the one thing that actually catches contractors. That drops next Tuesday. I'll see you then.